All right, perfect, guys. Welcome in to the G Money Trading Group, G Money Trading Academy. I'm your host, Gerardo G Money Pies. It's Sunday, January 25th, 2026. Today's actually a part of a VIP free trading pass that we have. So make sure that you're aware of that. Let me just go to that section. Yeah, so this week we'll be officially opening up the G Money Trade Group February 1st. All prices that promotions that we have will expire January 31st. So this next week, today, Monday we're off with from the live trading, but we're live in the telegrams. Um, these right here will be open to the public. I refreshed the calendar, given there, I put in there the free Zoom access. I guess no restrictions, and from here anybody can access if yeah, it's open for everybody. I also made that announcement inside here, the free trading pass week. So this provides free access to the VIP schedule and live sessions, giving members and new participants the opportunity to experience how sessions are run ahead of the official rollout. So simply here goes the schedule, how to access, just go to the calendar. For the notes, access ends January 31st. It does not include the VIP education. You're not unlocking the courses. You're not unlocking any indicators if you're free or any of the premium tools. The recordings, I have to save them where they normally get saved. So this one, you will not get it. The other ones, you may or may not. And ongoing access requires the active membership of the live schedule. The community is still free. Okay. Official launch date, February 1st, 2026. And if you know someone who can benefit, let them know. Yeah, so you guys can go here and always share that in your socials. Click that in there. You can just kind of little trading passes there, uh, sessions there. They can always jump in as well. All righty, guys. Any comments? Let us know. I like GIFs. I like GIFs, so always put them in there. All right, guys. Let's go ahead and get started with the slide, and then we'll go ahead and get to the session. Okay, I should see that. All right, perfect. So again, as always, right? As these calls are for education and purposes only, and any trade idea or speculation, it is just that. We all trade at your own risk. If you guys don't know me, I'm Gerardo G Money Pius here in Dallas, Texas. Right there in Dubai, beautiful Dubai. And my job here, my role here is to help and serve and help you master the skill of trading. It is very rewarding. It's taking me places, travel around the world. But if I can show you guys a skill that can help you reach any of your financial goals, that's my purpose here, right? Making sure that it does come with time, though, right? It does come with time, but for the most part, time, practice, experience. But we're here to serve you guys. Okay. So my mission is to support individuals in trading through education, strategy, and community. How is our membership structured? So it's three parts, right? We have a community, private, and investor. Private and investor is still not open yet, it's still coming, but community is already ready to go in the school as far as getting access. So as we learn, participate, and grow inside the trading community. So what do you get inside? Obviously, Mr. Talking to you, welcome in. You get the free trading community, live trading and study sessions, step-by-step trading courses, which those are being built between now and February 1st. There'll be that's some more detail on them for them. And then obviously the indicators depending on the subscription that you have, right? And then what are our subscriptions? We have the standard one, which is $0 a month, right? That gives you access to the school community, the calendar, and whatever schedule you have, and then the posts that we are share there. We have a premium, right? That one is $40 a month. You get to trade with us and join us 3 days of the week for live trading. And last but not least, right, is the VIP, the $297 per year annual membership. This basically includes everything in the community program, and you get access to the SMT indicators, Includes all the live trading. So you don't have to pay monthly anymore, and the SMG indicators. This actually turns out to be cheaper at $25 a month, and you get more as well. Okay. We do have some optional add-ons, and it's kind of a light announcement, but it's gonna happen for sure. We have Neo. You guys already know Neo, our AI trading companion. He is $200 for the annual and 150 for the annual access, right? Once you pay for it, it's through TradingView. So once you get them there, I'll give you access for an entire full year. But what's this thing on the left hand side? Duo trading. um, a group approached me and they wanted to open up a Spanish speaking language trading community. And through their help, it is gonna also launch February 1st. Today at 6 p.m. Central, we're having our first presentation call. It's not going to interfere with anything that we have going on right now because I created a separate school for that department. Okay, separate school for that department is not going to interfere with our schedule. The schedule that we currently have for English stays the same. Entonces, si hablan español o son bilingües, pueden tener los dos lados de la academia uno a un costo y el otro a $25 extra. Pero si no hablan, si no hablan en inglés, tenemos academia en español que queremos abrir también el primero de febrero. Okay? So more details on that. Of course, right? There's always a promo here before pre-launch, and it ends January 31st. So right now, until January 31st, our live trading subscription is $25 a month. You keep that price until you cancel, because if you come back, it will be at the price rate that is at that time. VIP Trade Circle, you can save yourself $50. 247 a year. 247 a year. And obviously Neo, this one right here, guys, this is the one that you do not want to miss. The AI trading companion will be 175 lifetime as I'm wrapping up the final things before launch. You do not want to miss this one because it's been only Neo has only been around with us for like 2-3 months, less than 3 months, and it's very consistent when it comes to giving you signals. You may or may not take them, but I'm also showing ways that that we can maximize it. It gave a good call on Friday. We knew gold was buying, right? Because we're doing momentum, but like when and what time when Neo gave us that 2-minute entry, and it went very, very, very well. And it went a little bit higher, then it slowed down. So definitely, oops, do not miss the opportunity. Is he still available, right? He'll be available still. Oops, so he will be available afterwards, but it's only for annual access. Anybody who gets the get them before January 31st will have lifetime access to all the updates that come with it. And maybe, we are going to add a premium alert system to it. At some point, I can't guarantee that by February 1st. As long as it doesn't cost me too much on the other side, we'll include it for the lifetime people. But if not, we'll see what the programmer has for that on that. But that's it there, guys. That's the introduction. We'll be repeating this introduction along the way all this week. Let's go ahead and kick it off. Let's go ahead and kick it off to the to the education call for today, and do a little bit of back testing and a little bit of back testing on the update that we have on the SMT boxes. Second. There it is. Perfect. All right. There was an update that I launched on on the S&T 7 the other day, and it actually now, if I go back to the charts, I think the indicator is has been scripts. Yeah, there goes Neo, Beta, and then SMT 7. That should be updated this morning. I guess not. Anyways, well, go to 5,000, right? That's what they said, and that's exactly where it's heading, guys. 49.88 on the Saxo chart. It closed. Our speculation was, go down and then go up, but it opened up very, very bullish. That's the speculation that we left last week. Let's see. Yeah, sure did. That was a speculation. It moved a lot, so much. If we take it here from this view and using the higher time frame sessions indicator, it moved a whopping almost $400, 393.85. The last few weeks, 133, 184, 275, 211, 103. So the average doesn't even get close to 200, right? If we take all of these numbers there. So very, very strong numbers. That price pumps up, and it just people is fundamentally, people are buying. People are buying fundamentally. It's skyrocketing. If we take the average of this, maybe these weeks right here, we can probably say we're at like a 200, maybe a 175 range. And if I kind of just measure where that price is at, there it is. You see right there? See how kind of it broke through that range? And then even before that range or the anatomy of the candlesticks were all created, it broke through that average. You see, it broke through the price open at this price level. This little tool here has me at 195. So price pumped up. Here, it broke through that 195 average, came back and retested, and then up it went. But Daniel, we're up this high, man. Any input you have on this?
Yeah, no, I was looking for that move to 5,000. I didn't know when it was going to hit, but I knew it was going to hit. Like you said, we were waiting on it. And I made Friday was a great day for trade, putting a trade in. I could even did it even from my cell phone and got myself almost definitely 60 pips. It was 60, 70 pips in one move, turned around. So I got 100 pips for today.
Very nice, man. No, yeah,
And
that's what Neil gave us, right?
exactly. Yeah. And what I did is I actually took it to TP1. I caught the trade and then I came back, retested it, and I took it to TP2. And that's why I combined the two moves at one time. Played it safe, took it to TP1. I said, what the heck? Let's see if it really does it and go to TP2.
There you go.
But that is the kind of the move I thought about because when you were talking about doing the averages, your average was off. Mine came out to about $300.
It depends
Um,
actually on the
I took 4 days divided by four,
okay.
and it ended up
Could be a
being,
broker, man. Let's see.
yeah, it broke it. Yeah, big time.
Yeah.
Maybe I took wrong number.
Oanda does read it differently. Oanda reads it differently. Gives you an extra zero for whatever reason on the
Yeah.
sessions indicator. But this one, I think the higher time frame one is good. Yeah, because I think that's dollar movement, not pip movement.
But what I like about the Owanda chart is totally matches my broker.
There you go.
So I don't switch between
The candles
charts.
too. The candles too.
Candles, yeah, pretty close, pretty close. Dollar price, pretty close. We're off by like maybe a pip or two.
Excellent, excellent.
So
No,
not too
but
bad.
yeah, gold is moving, the markets are moving, guys. And one I'll take a little note right here for us to kind of review. There's a good book out there called The Psychology of Money. I think by Morgan Housel, my friend recommended to me. And in chapter 16, the title is actually called You and Me, and it says beware taking financial cues from people playing a different game than you are. I like that because we're I could this we're in we're in the trading space, we're in the financial space, reading trends, markets, and everything. But I consider us more as day traders, right? I consider us more as day traders. So as I was reading this chapter, um, it there's some things that caught my attention that I really found interesting. And let me see if you guys would agree. So a few things that I highlighted, I'll read them quickly just to kind of gauge that conversation. So it says here, the first thing I highlighted, ask yourself, how much should you pay for Google stock today? Right? This is where it got my attention. The answer depends who you are. Do you have a 30-year time horizon? And the smart price to pay involves it involves it can that involves it, right? So are you looking to cash out within 10 years? Are you looking to sell within the year? So you see, even though a stock may be good, we have three different people, three different individuals who are not the same. They may not have the same pattern, right? Somebody may be older that doesn't have 30 years left, right? Somebody may be just starting out in the workspace and they have a lot of time left. So those little things come into factor. And then here it comes to my favorite part. Are you a day trader? Right? Then the smart price to pay is who cares? I love that. Are you a day trader? Then the smart price to pay is who cares? Because you're just trying to squeeze a few bucks out of whatever happens between now and lunchtime, which can be accomplished at any price. You see that, guys? I would have loved to catch this trade to 5,000, but um, we can make good money every day between live trading session and lunchtime, regardless of what direction, right? Regardless of what direction the trend really is, we can. And I think combining that, with our day trading, combining that long-term view and the fundamentals, the fundamental analysis, the geopolitical stuff, supply and demand that's happening around the world, it does affect the market. But if you're considering yourself a day trader, it should not affect your day trading plan, right? Our day trading plan as a day trader is you're just trying to squeeze a few bucks out of the market, uh, whatever happens between now and lunchtime, right? Yes, Ms. Iris. The Psychology of Money by Morgan Housel, just like house with L at the end. And the quick note here, so when investors have different goals and time horizons, and they do in every asset class, prices that look ridiculous to one person can make sense to another because the factors those investors pay attention to are different. If an asset has, this is another thing too. If an asset has momentum, it's been moving consistently up for a period of time, it is not crazy for a group of short-term traders to assume it will keep moving up. Momentum attracts short-term traders in a reasonable way. So it goes on and on about just the differences, and I think this is another good important area here. Oh, yeah, the last one, anyways. Here, yeah, I'm just gonna keep reading. There's three more left because it's really good information. It helped me a lot just to kind of because there's people that want to take everything into consideration, and like my strategy has been working pretty good, and so you know do I really want to change it? And I just was skimming through the book, found this you and me, and I found this chapter. Like, oh, I got it at the right time. So check this out here. When a commentator on CNBC says you should buy this stock, the news, right? Keep in mind that they do not know who you are. Are you a teenager trading for fun? An elderly widow on a limited budget? A hedge fund manager trying to shore up your books before the quarter ends? Are we supposed to think those three people have the same priorities? And whatever level a particular stock is trading, at it is right for all trading, and it is right for all three of them. Being swayed by people playing a different game can also throw off how you think you're supposed to spend your money, right? And last but not least, here, a takeaway here is that few things matter more with money than understanding your own time horizon and not being persuaded by the actions and behaviors of people playing a different game than you are. The main thing I can recommend is going out of your way to identify what game you're playing. Okay. What game are we playing? So, what is our trading plan? What is our trading goals? The way I teach you guys the market, right, is I teach you where you can use it however you wish, right? If you want to be a lot, well, we're here for day trading, options trading, but those small movements and trying to catch the big move at the same time as the momentum move can be can be quite tricky. Okay, so very good stuff there, and yeah, I found obviously some peace of mind whenever that came about, right? We all we all can doubt ourselves. We just got to talk our way out of it. All right. Before I continue, I do want to put this here. Let's go to Google. Go to 3,000 Bank of America. I remember this article here. There was a good article on this. Let's see if it's still there. Bay of A sees gold price hit in 2000 by 2025. Wow. That was 2024. It was a different article that that there was out there that I wanted to open up. I lost the link. It was like around 2020 when that happened. Um, but we're here at 5,000. Right, but so yeah, this article I remember I wanted just to find the date so I can show you guys. This article actually came out around 2020. Yep, right here, August 2020. That article of the Bank of America for gold came out here. Okay, 2020. The price line was 2075. Okay. The moment that article came, price dropped almost immediately. It actually did not go higher from there. So if we were a long-term investor, you bought at 27.75, it went as low as almost another, what is that, over $100, 1,000 pips, I guess you could say, in drawdown, 20% in there. Okay. Um, and then it went back up. You see that? Now we were day trading. That news didn't really matter for us because we could have sold during this time. There's a plenty of pips in between. I mean, if I actually use this from here, that's $432, which is 4,300 pips, 300 pip range. You guys see that? Gold nowadays moves very, very well. It's moving about 500 pips a day during the New York session. That we only need. I mean, nowadays, I mean, the 5 pip stop losses on gold are gone. They still work on the smaller forex pairs, but again, though, since then, guys, it's just been pumping up, pumping up, pumping up, pumping up, and pumping up. Where's it going to stop? Well, we have Fibonacci retracing tools for that to check out. And yeah, let's go ahead and start with our lesson. The lesson today will be we got the introduction out the way, and then from there we'll go with we're going to show how the SMT system works, the SMT boxes with the updates, and then we'll close out the right by 8:30 the weekly speculation for us this week. So let's start off first with the SMT box. Okay, this is an indicator that I coded, and really great indicator. It could be, we could use it. Good morning, Carol. We can use it as simple as possible. We can, it has more information to it. But we'll go ahead and break it down, its components, and at the same time, we'll go ahead and break it down, in fine detail as far as what it gives us. Okay, its components, right quick. These are, it's a series of boxes, series of rolling boxes. There's four of them: a 204 box, a 108, 52, and 17. So what the heck does that mean, right? So basically, there's 204 candles inside of the big box. 108 on the medium, which is the second medium, and then the 52 has 52, and 17 has 17. This was derived and reverse engineered from the great Ichimoku cloud, which is the first indicator that introduced to me in trading. And that one, very, very powerful, very, very powerful. Welcome in, guys. Are you guys not coming in? So from there, right, each box has a midpoint, right? Each box has a midpoint, and there goes your midline that you can turn off and turn on. It has a legend, which is down here, communicates to us kind of what the market is doing, what structure is the whole entire system have, what's the momentum on each one, and what's their timing on each one. Okay. There's little features there where you can kind of color the box depending on the direction, but I like it more that filtered out scenario. You can always fix that. This trend line has become very, very powerful, which I'll show you guys how to use it here shortly. It has directional flags. Let me quickly turn off the midlines so you guys can see those directional flags. Actually, a little bit better. These little dots down here, which that's the main thing that we're going to be discussing to start. And then what else? 20. So this is a good one here. Let's go ahead and kind of start from here. The lesson, as I kind of already went down with most of the indicators, right? So each box, it's one of the things about the market, right? Is that when you get into trading, right, and somebody starts introducing you to trading, what happens? Well, they see a chart, they see time frames, and which direction should I start? All this other good stuff. Well, I mean, we give them an infinite number of information, right? We literally said earlier that here, right, that was the gold 2020, actually, right there, here was 2020, and then everybody's saying gold is bullish, gold is bullish. And then in an intraday scenario, gold sells. And like, wait, I just lost money, but gold is bullish. So, right, some people at the very beginning won't understand that. Well, this SMT box, right? This SMT box, well, when you go to a smaller time frame, it'll give you an area to work in. Okay. It'll give you an area to focus on. Now, when you start switching time frames, they'll, you start adding more advanced features. But if you want to be consistent, right, for gold, a 15-minute SMT box is it's all you need at times. Thank you, Joe. We'll say that we'll get the recording for you, my friend, and I'll post it up. Thank you guys. Thank you for being consistent with what you do, sir. So there it is, guys. So each box, okay, each box works exactly the same, but there's different information that they communicate and give you an entire direction. So the 204 box here, okay, structure is bullish, momentum is bullish, and in this one, the time box is more specific to the 17, but it's possible to read without it. So why is the structure bullish? Well, again, the box is scanning and can only take 204 candlesticks inside of this box. All right, 204 candlesticks inside of this box, and it's a rolling system. That means that it is actually resetting as we get more information, right? Because when we get more candlesticks in the front, a candlestick in the back falls off. Okay. So as it's moving forward, it can only latch on to one lowest candlestick, which is this one. If I add a candlestick, the box shifts forward, we get a new candle, and we eliminate this one, but the low point does not move. Okay, so inside of this box, okay, here is our low, our lowest point, and obviously here's our highest point. If you would kind of connect those dots, well, I don't have a dot up there, but if you connect that, it's a bullish direction, and therefore it's a green bullish to the top side. So that's the low, and that's the high range. Each box, okay, has a midpoint, and there goes the mid level right here. Okay, that's the 50%. So if this price was $100 and this price was 200, this price is 150, right? If this was a 300 price level and this was a 600 price level, this is but I lost my math there. Somebody help me. I thought I was gonna solve that there pretty quickly. What is half of that? Anyways, half of that number doesn't really matter right now. It's half of that number. So that is a equilibrium level, right? This is the level of equilibrium. What is whatever's in the middle of 306. I was gonna put 150, but no, it wasn't. 450, right? This is even, yeah, 450. Thank you for the math people. This one would have been yeah, I messed up there too. But I should have used regular price, but you guys get it right. Yeah, it is 150. I just typed in 115. So that's how it works, guys. This is the low, the high, mid lane. There's also an advanced system here that would give you, as I mentioned, the 23 and 73% lines. These lines right here, they're like a higher equilibrium. Equilibrium, Michael, is more like balance, 50%. 50%. Oh, excuse me. Not 50% per se. It's just basically balance where buyers and sellers normally would agree, right? Normally it is 50%, but sometimes we have, so this is the mid equilibrium, which is normally 50% of a strong movement. But sometimes we have high equilibrium, right? Which is this area, this line right here that I just added. Sometimes we have lower equilibrium, okay? And great observation, Dr. I honestly have never seen it like that too. And yep, this is basically about 25%, which is 50 at the same time from this low to that range. Now I see this thing different now. You always unlock something in the matrix, right? Oh, and to that, right? The indicator was updated now. It is still a SMT system, but it's now known as the matrix because obviously that'll come later. That's when Neo comes in, right? And scans this market for us. But to make it simple, I'll turn those lines off right now. Alrighty. So here, structure is bullish on the 50-minute time frame. We want to buy low, right? So we want price to come as close as possible to that 50% line. And my projection is that once price gets there, they'll go higher. So we don't want to technically buy when we're too high, and we let price kind of do its thing. There it goes. They actually got halfway of the halfway, right? Touch to the trees, and then from there it turned around. I won't go over the time box too much right now because that's a little more complex information. But there it is, guys. That happened in the 15-minute time frame, and there it goes. Okay, let's go to a 2-minute time frame and find that same scenario. Let's see, maybe right here. Okay. What is the structure inside of the structure box? Bullish. Maybe we came back to equilibrium, same movement, maybe a little bit there, and go to the top side and see what happens. But you see how the equilibrium is shifting? And there it goes. So this box allows people to brand new people to kind of get an idea of where we at and so forth. Let's go to the hour time frame. Let's see. Now let's just go here. Okay. Here goes our box. Okay. The structure is bullish. Let's let price get as close as possible to about the 50%. From there we buy and then we take it higher. And there it goes, and there it goes. You see that, guys? That is how every single box works. Okay. When you add all the boxes, it creates a system for us. One thing that I did not mention was this here. Obviously, structure is bullish. The momentum is green for other factors, but when the price is above the actual 50% midline equilibrium, we are in buyer's territory, right? And then over here, we are in seller's territory. Okay. All right. Let's continue and add the second box, the 17. This is actually, but yes, Dan, well, thank you for that point. As time moves forward, as the boxes move forward, the midpoint also can meet to that price. So sometimes most times we want price to come back to equilibrium, but sometimes equilibrium pushes prices up. And yep, the market is always moving, it's always dynamic, guys. This is technically a real-time indicator, right? It's not a lagging indicator because as new candlesticks are fed, everything moves. But this 17 box, guys, works exactly the same as the 204 box. It just creates, a smaller range it just creates a smaller range of activity, faster activity, and so forth. Let me see if I can find you guys a better example. Now I'm using the 17 box, right? Only the 204. It is. Inside of the 17 candles, we have a bullish impulse, right? And we can do this, and then we can do that, correct? And it went lower, but then it went up, right? Why did it go lower? Well, smaller movement, faster movement. It doesn't really track it as well. And it was a better example maybe here. Same thing. Yeah, see bullish scenario, and it went lower and then it went back up. But you see how this one kind of flips a lot, right? Because the candlestick range of 17 candles is just too small. And then we were finding consistency with that. But this is where the big box come in, right? This one was the big box comes in. If this small box flips on us, it's just a pullback because look what the bigger time frame is saying. And again, we can read time frames or we can read movements with the box. Gracias, Pablo. Okay. Let's see, there it goes. So normally that's what we want. This is how I normally look at the market. Big structure, small structure. I want to enter the market when the small structure, there you go, Patrice, good observation there. I want to get in the market when the small structure temporarily goes against the big structure. Can you see there? It's a bullish structure. It's a bearish structure identified by those colors. Ideally, I do not want to get into the market when both structures are bullish. Can anybody answer to that? Why would not always the best to do that? Well, because we're buying at higher highs, correct? We always want to buy at pullbacks or trying to time when the pullback ends, correct? So this is where the time box comes in, okay? Which, yes, this is where the time box comes in. So let it turn, let the market breathe a little bit. And as the market keeps pumping up, Only 17 candlesticks can fit in there. And then next thing you know, once price can no longer, the little box can no longer control the direction, it will take a little break. And see, the system is communicating to us. We got a pullback. That little number there is just says how long the pullbacks has, how many candlesticks has the box been in the pullback. And it's first candlestick. 2 candles, 3 candles, 4 candles, 5 candles, and so forth. Okay. So here we're basically waiting for this dot to get back bullish. Once you see that, there it is. Now we can buy, right? Now we can buy from here and take off. All right. It's gonna reset. It could reset again, what it just did. And then from there, it'll take off again. You guys see that? That is how the box system works. Well, again, this box system is known as the matrix. My colleague and I, Marcus, my trading buddy since 2018, we've been at this. We created a matrix team. He comes in once a month, and we do some matrix classes. So and fitting we were able to there. Think so. A complex pullback, Sylvie, is when you have you have some more pressure from the smaller boxes. And in this case, it's the second box. When both boxes, the 17 and the 52, are against the structure. Okay, let's see this. It happens here. See, right now it's a pullback because only the 17 is there. This pullback would only, it's basically the 17 alone is only strong enough to bring it to about 38 and 50%. Okay. And then it'll turn around. But if we have both against it, it can bring us to 61 and to about 78% retracement. So let me see if it does it here. Come on, come on, come on, come on. Yes, you see? So now the dot 17, dot 52 are both against the structure, right? And it could potentially bring us below the 50% of that big box. Let's see what happens. Okay, it didn't. 17 turned back bullish. Sellers are not stepping in. Everything's back realigned. We're trying to get realigned. No. Okay, good. I don't get a question. No, actually, let me pause. I answered too quickly. If you got the skill to work on that area, it is a good opportunity to sell. Yes, but only obviously to about halfway, not a reversal sell, right? It's good to on a pullback. It's a 50-50 chance, right? That let's put more of a 70-30 chance that we can trade it. But when it's a complex pullback, we can have more room. We're always looking for room, right? How much room do we have? Yeah, how much room do we have to really trade? So if for example, if we get a complex pullback information, and we were trying to buy from, let's say, 50%, it just say, okay, be cautious because it may actually go lower before it goes higher, because we have some sellers stepping in on these two scales, right? But it doesn't necessarily mean buy. We always want to technically try to go with this as much as possible. Okay, we're trying to go with that as much as possible in that direction. All right, let's continue. Let's see here. Questions, comments, Dynamo, anything you want to add in there as we can change the tone a little bit here?
Nah, it's pretty simple. Like I said, it's all about support and resistance. And the different boxes create those levels of support and resistance. If you happen to, if the 17 is too strong, like I said, the complex pullback the interesting thing about that is you can take it from the midpoint of your 52 boxes. See how they're lined up right? The 52 and the 17 is equal.
Hmm.
It's that whole rubber band effect. So on the big box, basically. So
Yep.
we're stretching and stretching and stretching, and all of a sudden they're starting to see the relieving tension. But if you put your 23 line on, that's why I like the 23 lines, the 23 and 77 lines, because it to me tells me whether we're going to go lower or higher because of the we'll see if it comes back and hits the actual 50 because the way I guess you could say it's the selling pressures you were talking about.
Hmm.
But as Dr. Latrice points out, we got a nice kind of a weird M pattern going, and but we got this on reversal to midpoint. So are the W? And what I've always noticed, if you got a situation like this, this is my where I notice price snaps back to.
Right.
And if you fib that, that's your 382. If you fib the boxes, you know.
There you go. Just give or take. Again, this is basically a Fibonacci as well, right? The box can work as a Fibonacci tool at a glance, right?
Mhm.
For us to do. And then, yep. Or the
Right.
other,
Another
or the other
50% of
50%.
the 50%. Right. Exactly.
Yeah, and as Dr. Cheese, I've never seen it that way too. If I, yeah, because I started
Yeah.
noticing that these this upper equilibrium, 50% equilibrium, and lower equilibrium, and technically that is 50% from the mid to the high, and
And that 1, 2, 3 strategy is let it pull back to the 50 and then go.
and check this out. Look at this, Dr. Latrice, right? You know how I love using the fibs. If I actually that, I'm gonna check this out too. If I start the fib from the actual midline and then take it to the high, now we're buying at institutional level based on those numbers. Because we always want to buy from institutional levels. And look at that. Bada bing, bada boom, as Danimal likes to say.
Yeah, bada bing, bada boom. Yeah, like exactly. And that's why I said it's so important to know support and resistance, supply and demand. Dr. Latrice sees them as W's or M's. And all that is a harmonic pattern, which is Fibonacci tool in and of itself.
Yep,
And
yep. But
those
you
are
see, guys,
always
oh, sorry
good
about
things.
that.
I see
But
those are always good things. Pay attention to those big movements and start memorizing some patterns that are familiar to you. It's easier for you to trade.
yes, absolutely. So, very, very good. I mean, believe it or not, today we had a breakthrough. I had a little breakthrough as well that I didn't see prior on the SMT boxes, right? And again, the reason why this system is born. So this box here can keep us all in frame. Toby, it can work on a smaller scale as well. And again, Neo can also help us scalp too. And so, what is Neo, right? What is this concept of Neo? Well, this concept of Neo, right, is that there is a strategy that there's a movement here that is happening that we can participate in the market, right? So, for example, like right now, let the market align again. There it is. There it is. There it is. There it is. All right, perfect. So here, guys, right? Structure is bullish. Momentum is bullish. We're looking for buys. We can buy low at the 38%, or this is now the institutional level. Dr. Latrizi, you just probably add another percentage to my trading, and I'll try to share some with that with you. Because now we're literally at the institutional level from the upper midpoint to that area, and which is at the same time 38% of the entire box. But this is how it works, right? Um, the best thing to do is to wait for at least the 17 box to go back bullish. Once it does go back bullish, right there. Okay, now we can start buying. Let's get a wick back into that own 50%, and then we can take off. Okay, from there. And there it goes. Okay. Actually, it's not going to work there because of what just happened. That was that shaky movement that we got that day. Set that limit order. Very nice. Probably here. Probably here. Yes. Yeah, things we give a signal here. Should. All right. So same thing here, right? One more thing. Structure bullish, momentum is bullish. Do we sell? No. We wait for the 17 or the time box to go back in realignment. Complex pullback again. What is a complex pullback supposed to do? It's supposed to bring us all the way down here. But if it fails, that means the sellers are not in. There it goes. You see that? Realigned. It's realigned orange because we still got that little dot up top. If that dot up top was not there, it'll realign green. But it's just a little caution thing, right? So the plan is for us to enter there. It's a very tight stop loss in this scenario, based on this move, but that is the movement that it tries to read. Let's see what happens. There it goes. Pump. Okay. So this movement here, this box, right, is known as, it's just a complete system known as the matrix or the structure momentum timing. But so how does this little guy come in right here? Okay, Neo, your trade buddy, no pun intended, right? I created a system that will allow us to read this, right? It allows us to read the box. And if I add him, where's he at? Where's he at? Where's he at? Where's Neo? I don't even have him in my favorites. The original trade buddy lost people a lot of money in. I'm trying to. Neil's trying to save the day. Oh, we can go on forever with that, huh? That's where Neo comes in as I turn him on. There it is. Okay, I need to make an update. You guys, is that? You guys should not see edit mode. You guys, well, I think you do. Yours has edit mode, but it should not. Where's my invite only? Hold on. Refresh. Anytime there's something wrong with your technology, just refresh. Spots. All right, perfect. That should be it. Okay. Indicators. Neo. There he goes. The gmoney one. Perfect. Yeah, yours still says edit mode. That was just when I was saving it over. I forgot to remove that. But as long as you had, I mean, obviously I have two. I have the one that I work with and the one that I sent you guys. I just made a mistake on name it. It's fine. Neo is reading these movements for you, right? Is reading these movements for us. Let's put it like that. Alrighty, is reading these movements for us, and right now it's off. Right now it's off. Okay, but what is it looking for? Well, it's because the color is green right there. It's only looking for buys because it's reading the matrix, and the matrix structure is green. You see that? So that's why it's looking for buys because of that. So Neo only will be looking for buys. It has very specific, strict rules that I share with you guys on what it looks for, right? Yes, Dr. Latrice. It's a name update. It's an upgrade. Jibo was just temporarily named. Neo is Jibo is now Neo. Okay, Jibo is now Neo, and so here, as those movements occur, um, see we'll focus on the little box here. Let's take out take this thing out. Perfect. Okay. See how the little dot is red? Still in pullback. When that shifts, There it is. Okay. Didn't give us one. I thought it would. Ah, okay, good, 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 good. Very good here. I'm glad. I'm glad. I'm glad this happened right here, guys. See how we realigned? I have some coding that it can only realign and give us a signal if it meets this stop loss minimum or max. It cannot give us a smaller stop loss than 80 and a bigger stop loss than 120 for gold. Okay. The stop loss goes at the low of the 52 box. Stop loss 1. I have a different engine that will give us a different signal, like a backup engine. Michael, for to refresh, just literally refresh your trading view, or sometimes you go to the indicator, right? You can go to the just delete it and add it right back again, and then there's also like a refresh area here. Easiest thing, refresh your trading view. Actually, no, delete your trading view from here, refresh it, and then add it again, and that should give you the update. Okay. So here, right, the stop loss is technically supposed to be below the second box, but because the entry is always measured from the midline to there. So because it's below 80 pips, no signal. Okay. But Neo is still scanning the market. When this little range improves over time, there it is. You see? Gives you the price entry, price stop loss, take profit 1, take profit 2. This right here, the risk parameter, that is how many pips it is from entry to stop loss. So that is minus 87. This is plus 87. And then from that to that is another plus 87. Okay. And that's how it works. But again, I just showed you guys that I coded this matrix, this SMT matrix, to read the market, to read structure. So the signal is coming from an area where I know a lot of movement happened, and a lot of times it's accurate. So here it's coming back towards the entry. Sometimes it hits it. These are usually the buy limit orders. Sometimes it just does not hit it because the momentum is too strong, and it goes back to the top side. Okay. Every time um, every time price hits take profits, it'll give you a label TP2, 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 and so forth. What does it do? Okay, I'll get to that question right there, Nico. No problem. So you see, it leaves a tracking system. If we go back and kind of review the the history of it, just by visually, anything that's kind of a dark gray, stop loss. Okay, stop loss are going to happen, but there's a whole lot of blue, there's a whole lot of purple, there's a whole lot of yellow there. Okay, I have 3 different engines running inside of Neo, um, um, and very good. Okay, this is it works on the 1 minute scale. It works on the 2 minute scale. Okay, it works on the 3 minute scale. It can work on the 15-minute scale, but not as often. It can work on the 1 hour scale, but not as often either. But you do get some. 4 hour scale, it's reading the market, but not as much. And why is that? Well, because the stop loss in pips increases, the range from entry to stop losses are higher when the boxes shift and realign. Therefore, it cannot give you those signals. 52 refers to 52 candlesticks inside that box. Yeah, so 17, 52, 108. So and the stop loss is always at the low of the 52 box. That's it. That number inside of the box, the candles, there can only be 17 candlesticks inside the 17 box, and so on and so forth. Does this work on other pairs? Well, let's go check. Let's go check, for example, USD JPY. Yeah, it gave you some signals there on the 4 hour. But as I start going lower in time frame, it's kind of backwards where it doesn't work as often. If I go back down to the 5 minute on the USD JPY, you don't see as many signals as you do gold. And why is that? Well, simply because you see if you have Neo turn red here, Neo turn red because the box itself, the matrix is bearish. Nice little touch there that I added in there for us to visually see. Well, USD JPY cannot give you a minimum stop loss of 80 pips on a 5 minute chart. It is just too big of a range for it. You can always customize this. And there it goes. There goes there. See all the signals that it gave? Euro USD, Dr. Latrice asks? Absolutely. That 5 to 50 pip stop loss definitely works. Okay, I'll cover that in a second. There. Let's see, so there is an alert system, Michael. You simply go up here, click the dots, and yeah, Neo. Where is the alert system? Okay. Did that go away by mistake? You see yours on Dynamo, yours? It
I'll
should be.
check. Oh, you know what? You
It's
might
not there,
be.
right?
Huh.
Okay, I probably deleted it by mistake. That's something I'll add before the market opens because you do. Are you running Neo edit mode, Aniko? You probably would. Edit mode, here, like you see up here. Neo. Interesting.
Yeah, this and add in the mine does show alerts.
Does it? Mine does not for now. Again, sometimes these things just glitch. Oh, you know why? Because I'm not in the live market.
Uh,
There it goes. That's why. Yeah, so Mike, yeah, you do need a trading view alerts for him. That's what I was telling. That's what I was mentioning earlier. That my plan is to create an alert system that can communicate with us outside of trading view, where it can kind of ping us in Telegram. I'm working on it with the programmer to help me do that. But yeah, okay. So right now everything's inside the trading view, and you do set alarms there and so forth. There was some changes there, Sylvie, on this. I won't have time to cover them today, but I'll make sure that I do that for us with some updates because I think I had a little glitch on the SMT that happened the other day, but we'll go for, but and so there were some changes to that. But long story short, guys, Neo reads the market, finds opportunity for us, and green means go. Yeah, green means go. Green means that we're trending. Green means that we're trending. And what else? What else? Yeah, it works with all pairs. It works, the the matrix, the Neo is just scanning the market for this equilibrium movement in boxes. Once it realigns and if it passes the parameters, it'll go. Neo can work with the other coins and stuff, but right now I don't have it programmed. It's pips. I just need to work on those updates for that. And as long as it can be used in TradingView. And yeah. Yeah, so the most up-to-date things you guys should have should be your your indicators in invite only should have Neo Beta 2006, 2000, January 2026 by G Money and SMT 7 by G Money. Okay. I'll put it in the school, Michael, but I'm gonna be doing updates to this on the Neo classroom, so you can see the tutorials there. Okay, there's a tutorial inside of the Neo classroom that you can get. All right, guys, 8:30, went a little bit over. Let's quickly do the weekly outlook, and then we'll carry it from there. And I will also share the weekly outlook in the trading telegram. Okay, so let's see what gold goes to this week. Um, I think we're going to go to 5,000. Wrap it up. Wow, just realized the date. Okay, so three consecutive bullish closes. Three consecutive bullish closes. We had reversal and then continuation. It's not always the case, guys. It's not always the case. You know, at this point, we had three consecutive, and then we had about six more consecutive days. Then we had a pullback, and so, okay. However, this range is important to me. And we'll go ahead and mark the previous weekly high and the previous weekly low. Thank you, Carol. Happy Sunday to you as well. Okay. This range is important, but we got to start from here. 4 hour. Let's put our fibs on it. Yeah, it's been a lot of volume during the Asian session. Previous weekly fib, there it is. Previous weekly low, there it is. And we talked about how the box system, right, has a half of half, and 23% is literally half and half. And look at the institutional level is 50%, right? The bottom half. I've never seen it that way. It makes sense why those levels work. That's why it's good to have a team and different set of eyes focus on exactly the same thing, because when you do, you get more feedback. We understand faster. All right, so there goes the Fibonacci range on the previous week. Pretty big one. Ideally, right? Ideally, this is what we're looking for. We want price to come back to 50%. We have one, right? We want price to come back to 50% of 50%, which is the 23% level. All right. Boom and boom. That's what we want. That's the plan for today, for next week. However, we do got to kind of go down a little more in time frames. On the 2 hour time frame, my boxes come in. And see, all last week was bullish. Monday was bullish, Tuesday was bullish, Wednesday was bullish, Thursday was bullish, Friday was definitely bullish as well. So because the market is not open, I don't get a new box. But we can create a nice little range right here. From low to high. And so just go ahead and put that there. And there it is. So now each box has its own there. So that goes to 50% of that. Maybe this is too low, right? Maybe this is too low. Maybe it needs to come to 50% of the previous day. because this range here is Friday, and then it'll take off. Okay. All right. So I will leave it like this, since this is just a speculation. Won't go into too much details. But ideally, the plan is price can come back to, we like for it to come back to 23% of the previous weekly area, which is the low of on Friday. And if it wants to go just a little bit deeper, it could potentially go to, 38% of Thursday and then take off. That's the speculation, guys. We'll go ahead and wrap it up here.
Which is also the high of the week, just the Wednesday. That the 38 of the.
Yes. Yes.
Yeah.
Yes. 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 Gold weekly outlook, all in caps. Not yelling at anybody. You just kept it like that. All right. Guys, this wraps it up for this session. Thank you guys for being here. Thank you for the support. Any questions, keep them coming. If you're learning the system, keep learning it. Use the Telegram to communicate. If you're a member, premium or VIP, there is a Telegram for you. Another Telegram, right? But definitely get organized with Telegram. You can create a folder and just put my information there, and your trading partner there, and from there, you can what's it called? Have a smaller filtered area. But this wraps it up for today. I do appreciate everybody's support and growing this community. We'll officially launch January 1st, but don't miss your promos if you're a visitor to us. And we see you guys, everybody, in the next week for live trading. Thank you and bye bye.
Responsible guy, treating me like you're supposed to do. Tears run down my thighs.
Sorry, I was trying to put the slides back up, but this didn't stop.
A little respect for women can get you very, very far. Remember,
Hey, guys.
to use your phone
Hey,
makes
Patrice.
me so
Hey, you.
hot. Considering I have feelings, I'm
Golden Goose is coming.
close to on.
Thanks to you as well.
Offering